Welcome back to 7-Minute Options on January 31st, 2022. What on earth is happening to the markets today? Everything is green. Everything is green. Yeah, it's a good day. It hasn't been a good year so far. You can see I'm down 5.6K year to date, and it's only been 31 days. So it's been an absolute cluster. But today's a nice day. You know, my account's going up today. Can't complain about that. Okay. So right now I got 18 days left in the current expiration cycle. I'm going to quickly run through my portfolio and what my plan here is. So Astra, this is the rocket company that I'm a big fan of personally. Again, not investment advice, blah, blah, blah. But so I have a 7.5, 12.5 straddle. I'm going to roll that one out. I have a naked $5 put. When I sold this put for 43 bucks, I figured I either keep the 43 premium or I take the shares for $5. I'm going to let this one ride the whole 18 days. If Astra stays where it is at 473, I'll just pick up 100 shares for $5. So that's 100 shares for 500. Really, I'm perfectly happy doing that. Actually, that's probably good because it lowers my cost basis. Right now, I have 100 shares that I bought for $12.50 back in the day. So I'm very happy to lower my average cost per share if I buy 100 shares for $5. So I'm going to let that one ride. I'm going to try to roll these ones out into the next expiration cycle in March. Again, only picking up 26 bucks in credit. You know, why not? Money is money. Let's do it. Let's see if that fills. All right, quickly running through the rest of the positions. Next up on the docket, EWZ. All right, so this is a Brazil ETF. And again, quite bizarre. So it's been kind of going up now since January 6th. So for the last 3.5 weeks, it's been going almost straight up, which is kind of weird. Looking like it's going sideways for the last 3 days or so. If I zoom in, it's been going sideways for the last 3, but it is a little bit above our short call. So we had the 25-30 strangle. Right now it's at 31. So I'm going to try to roll this out, but I'm going to try to adjust it a little bit. So let's try to put this out into the March expiration. Picking up 63 bucks in credit just by doing nothing. See if I can move the put up to the 26 and the call up to the 31. I would pick up $3 in credit. Let's do that. I already have a closing order for EWZ. Oh, of course I do. I got this stupid error every single time. I forget that I got these GTC orders on. All right, so let's try that again. So it's interesting. I mean, I could pick up 63 credit just for keeping the strikes where they are. Or I could just pick up like $3 in credit by doing nothing. So, I could pick up 63 in credit by not doing anything with the strikes, just keeping it where they are. Or I could adjust the strikes a little bit and pick up no credit. Which one's better? Which one's not better? Yeah, I feel like I'm gonna try to adjust them a little bit. This way, if there's a bit of a pullback in this one, hopefully I can reach my target and get out of this with a $30-40 gain. So again, not sure why this Brazil ETF with a whole bunch of Brazilian companies in it has been going up for the last 3 weeks. I didn't think that the economy of Brazil has really done all that great, but hey, why not? Hopefully it'll go sideways from now on. Okay. FUBO. So I like FUBO. I got the 11 put, same idea as I had with Astra. So if I pick up shares for 11 bucks a share, I'm happy. So I'm going to let this one ride. Right now, FUBO is at 1072. I'm just under my short put. If I pick up shares for 11 bucks, that's perfectly fine because I'm going to keep the 50 credit. So in reality, I'm picking them up for 1050. Right now it's at 1072. And if it climbs above 11, well, then I just get to keep the 50 and that's fine too. Okay. Looking at this one though, the 30 put 30 call, I'm going to roll this one out. And looking at 30, the expiration of 30. So the 30 strike does not exist. So I actually have to pay money to roll this. So I got a couple of options here. I can either close this out right now. So if I were to close this out, it would cost me a pretty penny. This $30 straddle, close position. I don't feel like paying 2,000 bucks to close this out. but I will have to pay some money to lower this down to a different number. So let's say I want to roll it out. The highest strike is the $26 strike. Maybe I can turn this into a bit of a strangle here and pay $4.85 or $3.90. That's almost a $100 difference. I'm not happy about that. I think I'm going to keep it at the 26. Very little open interest on both sides, but the market is only a penny wide here on the call side. That's fine. On the put side, it's about 25 cents. Hopefully I can get the midpoint here. A bit of a pain in the ass, but that's fine. I picked up more than that. I picked up more than the $300 or $400 in credit so far, so I'm okay with it. And actually, it'd be nice to pick up the $11, the shares for $11, because that way I can again lower my cost basis on these shares. I picked up 100 shares for $20 back in the day. If I can pick up another 100 shares for 11, then my average cost for those shares would be somewhere in the $15, $16 range. That would help me out. GDX, this is great. This is one of the few things that's actually going my way. So again, we have a strangle. It really moved against our position, almost hit our short call. It pulled back, almost hit our short put, and now it's moving up back. It's right in the middle of the zone. But GDX is very high IV, still at 60 IV, 60% IVR. So, sorry, IVR is 60, which is very high. So as soon as that starts collapsing and IVR, GDX starts getting a little bit less volatile, I hope to make this target pretty quickly. Right now, so my GTC limit is at 37 cents to close this out. Right now we're at 51, so we're pretty close. As soon as we get a bit of an IVR crush on this one, I'm hoping I can close it out quickly. Joby, all right. So I have 100 shares that I picked up in Joby for $10 a share. That's because my put got exercised last time. And right now, Joby right now is trading for $4.18, up 40 cents on a day. I feel like I want to buy 100 shares of this just to lower my cost basis. I absolutely cannot play the options here because there's just not enough premium in the options. I checked it earlier today, but if I look at Joby right now, 46 days out, let's say, right now at 4.18, if I want to sell a $2.50 put or something, I mean, the extrinsic is like 5 cents here at the 250 strike, so there's no extrinsic value there. The $7.50 put or call only has $8 of extrinsic value, so the only thing here is the $5 put and call. That's the only thing that's worth playing, but that only has 22 cents of extrinsic. And really, if I want to sell, for example, the $5 put, $216 of buying power for only 0.5 theta. I'm not a big fan of that one at all. So there's no options to play here. So my only thing here with Joby is to pick up shares. And actually, maybe I will. I mean, it's at 419. Why not? I feel like if it's up 10% on the day, is this the day to buy shares, or do I wait until it pulls back a little bit tomorrow and buy? So I'm going to wait a little bit until it pulls back, right? If it keeps continuing to go up, that's good because I have 10 shares anyway. If it pulls back, I'll buy 100 shares for like $400. Palantir, same thing. I got a $14 put, same story. I'm going to let this one ride. I'm either going to pick up shares for 14, or if it goes above 14, then I'll keep these. I want to try to roll these out though. The 25 straddle. I can maybe roll these out for a scratch into the next monthly expiration in March. We'll see if that gets filled. All right, what do we got? Peloton up $1.68. I got a $30 put in Peloton, and I mean, do I want to roll that out? Do I want to keep it? Maybe I want to pick up 30 shares in Peloton, because if I pick up 100 shares for $30, if I pick up 100 shares for $30, then as it moves up, it'll help me. I do feel like long-term Peloton is going to turn around. I mean, maybe it's just a hope at this point, a hope and a prayer, but either way, I don't mind getting some shares. So I'm going to let this one ride, and maybe Peloton in the next 20 days or so climbs back above 30. If not, I'll keep the shares. I got $158 in credit when I opened it, so $28.42 is would be my break even for those. So I'll leave that one where it is. And this one, the 65, I'm going to try to roll this one out into March. Yeah, I pick up 19 bucks. Not picking up a whole lot of credit because these are too far out of the money. But I'll keep rolling it with the hope that it moves back. All right, SoFi. Disaster of a position. Again, $25 put. I'm just going to roll this one. I feel like this would be not a bad one to pick up, though. Let's see. Okay, I can, again, roll it out for a scratch. I would love to pick up some credit premium on these, but I really can't. I mean, $5. I'm not happy about that, but it's better than paying money. Good. So I just rolled that one out. That one failed. $12 though. Let's look at SoFi. IVR is at 59, so there's good premium in here. And let's see what happens if I want to, say, go out 46 days. Right now the stock is at $12.25. $181 here. Let's look at 74. $74 at the $10 strike. $326 of buying power. I get 1.5 theta, which is good, fantastic. That's well below my, it's better than my $300 per theta rule of thumb. And this one is a 23 delta. I feel like that one, this is not bad. SoFi, it really had a meltdown, but it's been kind of bouncing up or down since January, last 2-3 weeks there. And I feel like maybe if it's bottomed out, I mean, this is kind of where it bottomed out before, in August, before it went on a bit of a tear. I feel like maybe this is a good time to sell that. So I'm going to do it. $320 buying power. I pick up 75 credit. Yeah, 75, fine. 76, let's try 76 first. And then, yeah, if it goes down 10, I'll pick up the shares. I like SoFi. I believe in what they're trying to do. And so I think they recently got some kind of an approval to actually become a bank, which I think is good for them. So hopefully some good news with SoFi. Hopefully that gets filled. And whether I pick up shares or not, it's going to help my SoFi position a little bit. And it filled. Fantastic. All right. Square. Nothing to do here. Yeah. Tesla. Nothing to do here. UWMC. Again, 354 days to expiration. This is one of my long-term plays. No comment. Zillow. All right. What do we got for Zillow? All right. Let's see what we got for Zillow here. We have a 70-75 strangle. Zillow up a little bit, still hovering around the $50 mark. One of these days, I think Zillow has got a pretty good business model. A lot of users, blah, blah, blah. I've said this speech before. Again, not investment advice. Don't look at me unless you know that my performance hasn't been all that stellar this year. But yeah, if I can roll this out, I'm going to roll this out, and eventually I'll take the $37, and eventually this will move back. That's my hope and a prayer. If Zillow moves back, my account will look a hell of a lot better. All right, so that's it. That's all I got. Sitting pretty with my option buying power. I don't want to push it again. I don't want to have any more margin calls, so I'm going to see where this goes. I have no idea what this market's doing. Like, whatever. I'm not going to complain because I had a good day, but I have no idea what tomorrow will bring. And we'll see. If there's a bit of a pullback in like Astra or FUBO or Joby or one of these positions, I might pick up 100 shares tomorrow if there's a pullback or a red day. Just lower my cost basis on those. Otherwise, waiting for Peloton and Zillow to move up. Definitely Zillow. I think between Peloton and Zillow, Zillow is probably the more robust, more stable company there. But that's where I think my biggest hope for a gain is. So I'm going to be adjusting these positions right here just to get them filled. Otherwise, see you guys next time. All right. Thanks. Bye.